welcome. You're watching Market Today on Business Today Television. I'm Sakshi, Batra, and with me is Shail Bhatnagar. This is a show where we help our viewers understand what's really going on in the closing hour of the day's trade. It's panned out to be a painful day for the stock markets. We now see the Nifty drifting towards the day's low point, 385 points lower in trade, 21,946. So we've tested the 22,000 mark as well. Just some weeks back, you had seen that the markets had shot up to all-time high levels of 21,520 odd levels, and now we've come down from those levels. If you see from the peak, there is a sharp fall, and right now there's a 1.7% decline on the Nifty. Day's low point is what you can see the Nifty trading at. Where is the pain point? It's the broader markets, the mid and the small caps that are seeing an even sharper fall in trade today. The small caps losing about 4%, 5.5% now in trade, 14,292. A very, very steep fall is what you have seen on the small cap index. Mid caps as well, they've come under pressure. 4.5% of a decline can be seen on this one. Sectorally, all the sectors have slipped into the red, with the realty index now down by 6.4% in trade. Metals 6% down. We also have oil and gas that's now down by 5%. Most of the sectors are dragging anywhere between 2 to 5% as well in trade, including healthcare, auto, consumer durables, PSU banks. There is pain all through. The IT sector is down by 0.8%. FMCG, which was a top mover in trade today, that's also slipped into the red now. The Nifty Bank also down by 0.7% in trade as well. So it's pain all across. From the Nifty 50 stocks, it's just 3 stocks that are holding their ground into the green. Rest of the stocks have actually slipped into the red. Shail, looks like this is finally that froth and bubble that SEBI chairperson Madhabi Bhuj has been constantly talking about, and that seems to be now in a bigger pain point.
Okay, Sakshi, I just like to use this opportunity to mention 2 or 3 broad points. See, the second fortnight of March starts with the advance tax payments that everybody in the market who's made profit has to pay. So a lot of tax related selling happens in the first week, the second week and the third week of March. You can pull back the Nifty in history and you will see that the second and the third weeks have been extremely volatile. Now this also comes at a time when there has been a lot of regulatory effort made to somehow bring valuations, to somehow make people aware that there seems to be a build-up of froth or maybe incipient bubbles. So these 2 things put together have resulted in this sharp decline. Notice the normalcy on Nifty Bank. It is just down 0.7%, 46,930. You have seen sharp cuts on all other indices. The Nifty Bank, of course, it's the weekly expiry. My feeling is in the next 2 or 3 days, this panic will settle down. There is no cause, no fundamental cause which is in front of us to see these sharp 5, 7, 4% percentage point declines in the indices that you mentioned, except for the fact that people, smart investors, are planning their tax returns. They've made huge profits over the last 8-9 months. And a smart investor is also a smart planner of tax that he has to pay. And that is what it is happening. There is no panic in the market. These are normal occurrences. They are volatile, and therefore you see this pain.
Okay, time to welcome our guest on the show. Mr. Vineet Bulinchkar is joining us. He is the head of research at Ventura Securities. Vineet, very good afternoon. Good to have you with us. The market's definitely in pain at this point in time, of course, led by the steep fall that we are witnessing in the mid and the small cap space. How do you see this fall? Is this just the beginning of a much deeper correction that could be on the way?
So, if you remember, it was foretold that, and I've been consistently saying on your earlier shows that Feb and March will be a painful period. It didn't happen in Feb, but March is not disappointing. to that end, while it is eroded profitability a lot for investors. So, it gets added on because of the scam that's brewing with ED freezing accounts of Harsh Tibrewal. Second is SEBI coming and making noises of fraud. Third is the mutual fund industry coming and freezing bulk purchases of mutual funds in small and mid caps. And fourth, which is the worst that can happen to the market, is the regulator asking brokers to cut down on leverage. So all this has snowballed into a domino effect, and you are seeing the kind of deep cuts that are taking place across sectors, across stocks, and no one is really spared. Uh, I expect this to play out till the last week of March, because although the advance tax numbers, payments will be done with, and there will be this thing, no one would really want to wager buying, into this year end. I believe the rally, which typically, over the last 3 years has always happened, is that April is a fantastic bull month, and you can see stocks which have corrected sharply with strong fundamentals can rebound between 15 to 40% in the next 45 days. So I concur with Shail that this is a correction to the rally, and the bull trend is still very much intact.
Good afternoon to you, Vineet. And of course, you've summed it up much better than what I could hope for in terms of the four major themes that are running through investors and traders' minds. And let's be very honest about this pain that we are seeing in mid caps and small caps. The rally has been spectacular. I fall short of words in describing the amount of money that people have made in small caps and mid caps over the last 8-10 months. And this is probably a time when the party has when the music has stopped, the party still hasn't ended, and people are probably sort of taking their breath in and resting a bit and then moving on. So I'm not much worried because there doesn't seem to be panic sales. These are fairly okay kind of unwindings that are happening in prices, and more or less this is what we've seen in many years over the last decade or so, that March looks to be a very volatile month. Vineet.
Yeah. So of course, we've been seeing, but there are pockets of opportunity that is now creating for those people who could not buy when the indexes were hitting 22,000. So if you remember, a lot of investors were calling the market rally overvalued, and the juggernaut kept rolling on. So there is an opportunity for the investors to come in, and those who are sitting on excess liquidity can start nibbling back into the market. I believe that the railway stocks, the defense plays, there the bigger story is going to start unfolding. Infrastructure is a very strong theme. We've seen the Adani pack of stocks kind of correct quite a bit, giving an opportunity to get into them, because I think they have some amazing times ahead of them over the next 4 to 5 years. A lot of money to be made there. So we are kind of positive on these entire gamut of stocks, and we will be buyers in these stocks over the next week, gradually nibbling at them.
So this is the Adani pocket that you're talking about, that you will be looking at buying the stocks. So your top 2 or 3 stocks from the Adani basket, and beyond Adani group also, would you be looking at buying anything else as well?
Yeah. So Adani Enterprises, Adani Green, and Adani Energy Solutions, along with Adani Power, look very, very good. These are the 4 plays primarily driven by the power theme amongst all these stocks. Keeping with the railway stocks, I think the railway stocks offer very, very good opportunity. We've seen some very deep cuts coming in, and we also like Markson's Pharma in the pharma space. We believe that stock should do well. I think the financialization theme is holding out very well. KFin Tech is one of our top picks. If you talk about the larger trend in the gas story, prices are going to remain benign as the forecast is because of surplus happening there, and Aegis Logistics and all the plays around city gas look also very, very good. So these are some of the themes that immediately come to mind in terms of investing.
Okay, this is a broad thrust that Vineet has been pointing out over a long period of time. Vineet, let's just drill this a bit more before we get into the main stock of the day, which is ITC. Within railway, two stocks that you would prefer to nibble.
I think Rights is very strong, and Jupiter Wagons looks very good.
Okay, let me just write this down against Vineet's name, Right, and Jupiter Wagons. Okay, now ladies and gentlemen, let's come to the main story of the day. We've discussed the carnage, we've discussed why this has happened. The PCR will draw a chart for ITC in front of you, and despite the mayhem, despite the naysayers, here is ITC strong at 424 rupees, 4.5% higher. On very, very heavy volumes. The reason behind that is the block deal that parent British American Tobacco has done in India, selling about 16,700 crores worth of shares. We need your first reactions. Who would be the buyers, and how quickly and how smoothly this blue chip stock was received by a clutch of investors? What does it say to you about ITC?
So, at a price, appetite for ITC persists. Okay, the weakness and the dip that we have seen earlier from 460 odd levels coming down to 400 was purely in the anticipation of this block deal coming in. This block deal was exercised at a discount to the natural price at which ITC should hold, and the stock is now firming up, and I believe that a new leg of growth will take place because we believe that the cigarette business is fairly constructive. If you talk of the FMCG segment, their EBITDA margins have stabilized. Portfolio is a huge juggernaut and it's doing quite nicely, needs to get re-rated. Hotels as a space is doing very well. Agri commodities are going to be the necessity globally because of the food crisis, and paper itself is a great growth story. So all five engines firing very well, and with BAT lowering its stake, there is a possibility that BAT might give ITC a free hand in, while earlier they were wanting to have control of the company, but it seems that now the stake sale tells you that they're not so much interested in owning the controlling stake in the company, and that they will give a leeway to the ITC management to go quick with their strategic plans, so that the value unlocking can be take place and they can further lower their stake to around the thresholds of around 26%.
Okay, there are two things that need to be mentioned here. While British American Tobacco did inform investors that it would be selling a decent chunk of its 29% stake, that has happened. BAT has also made it clear that there won't be further sales, and at least 25%, 26% of ITC is what BAT wishes to hold for the real long term. Vineet, the other issues is the potential unlocking that ITC might do for its Indian investors. There's this talk about spinning off of the FMCG business. The hotels business needs to be relisted, as does probably paper. For all those who have longer term memories of the market, three decades ago, ITC Hotels was listed separately. ITC Bhadrachalam was listed separately, which is the paper division, and of course you had the mainstay ITC, which was then a cigarette company, but it is now a huge FMCG player as well. Some of the parts valuation, what would be your number on ITC, Vineet?
500 plus. So last time when we had initiated coverage at about 240, we had a target of 430 that has been achieved, and we'll be constantly re-rating it. We haven't re-rated it in a while. there's a chance now that the entire thing is settled down to re-rated. We think that 550 is a very, very good target to go with in for the next near term.
Vineet, when we look at ITC as a conglomerate, of course, looking at the valuations, the value unlocking that one can really look at from the demerged hotel business, how should one really look at this point in time? Would you look at it as a fresh buy at this point?
That's what I've been saying, that we had re-rated to 460, our targets were achieved.
Yeah.
Then the stock has kind of come off, and we believe at these prices it definitely makes a lot of sense to get into it. I think there was a undeclared tussle between BAT and the current management, where BAT used to block all strategic initiatives of the company. But now with BAT wanting to be more of a passive investor, lowering the stake, this gives the ITC present management a good handle, of freedom or more freedom to act strategically along all their grand plans. So I think they will move faster. The unlocking will happen faster, and rather it not just being saying of a statement of intent. So the statement of intent can now pulverize into action on the ground and leading to unlocking of value as the businesses get unbundled and the stock starts performing, responding to that.
Okay, but have you heard? I think initially you were mentioning that
Okay.
LIC could be
Sakshi,
one of the purchasers. I mean, like, are you hearing of any names of who have been the buyers of this block deals that we've seen
So
today?
to be honest with you, I have not ventured to inquire who have been the buyers. But such a large deal, and ITC not LIC not being a part of this kind of a deal
Yeah.
uh, seems a little difficult. It's one of their favorite stocks because it gives them good trading opportunities, long swings they play, and LIC is always the buyer of true contrarian buyer in the markets. So definitely, if they've been selling at 460, I think 400 is a very good point for them to enter.
okay, let me just share some data that I have on the kind of buyers that have come into ITC. Two things I'd like to mention. The block that was done for about $2.1 billion is the largest block in the market since May of 2020. So that's at least a 36, 45 month record. This is the third largest block ever traded in India, and this is of course a good deal of demand was seen from tier 1 domestic mutual funds, sovereign wealth funds, and long only foreign institutional investors. Sakshi, we'll have the list coming in later this evening, but the fact remains that there was zero slippage in the price that was mentioned ahead of the book running exercise and at the transaction that was done. So the point is that it was done very smoothly, and all through the transaction, even now, ITC is the lone beacon of green that you're seeing on markets today. Let's hope that the overhang that was there on this particular stock is now over, and better times are ahead, just as Vineet is pointing out to his sum of the parts valuation. And of course, HSBC, CLSA and Morgan Stanley have come up with various upgrades to the price of 445 to about 470. That's the broad range I remember. Sakshi.
Okay. Apart from ITC, I think the only other two stocks on the Nifty that are holding up into the green zone is from the banking space. So Kotak Mahindra Bank and ICICI Bank are the other movers at this point. Vineet, how are you looking at the shift to large private banks right now that we are seeing unfold in this kind of a last 1 week or so, the move that has changed as far as the large private banks are concerned? And is this a space that one should start to deploy more funds, shift out from the riskier zones and perhaps move to stability?
So definitely, these three stocks that you mentioned deserve to be discussed. Number one is ICICI has managed to maintain leadership where all the other incumbents have struggled. right? Second thing is that HDFC has kind of done a course correction where they've openly stated that operating efficiency and profitability is paramount compared to growth. So first they are going to consolidate before they take on the growth. And with the valuations coming off, they're at possibly decadal lows. This provides succor to investors, and this clean commentary that profitability will not be compromised is going down well with the street, and you're seeing the FIs plow back in. The third thing is that if you look at Kotak, there are unofficial rumors stating that there is a cleanup activity going on in the bank, and this cleanup activity is well received by market players, institutional funds, and you will see over the next couple of quarters a little bit of more elevated write-offs in the or provisions to the NPAs, and this will lead to a lot of quality in the earnings, leading to a re-rating of the stock. So Kotak, which has been a severe laggard, can now be an opportunistic buy with a 6 to 9 month kind of a horizon.
Okay. So that's as far as the top large banks are concerned. And what about the PSU banks then? How are you looking at them afresh? We have been looking at big re-rating of most of these second rank PSU banks all across last 6 to 8 months. What should one do now here?
So I think they're a gold mine to be into right now, because if you take private banks versus public sector banks, still the valuation disconnect is very, very large. And if you see between private banks and public banks, quality of earnings of public banks are up. They're freshly capitalized. Their NPAs are down to zero. Practically new beginnings for them. So, we don't see any NPA deterioration happening over the next 2 to 3 years. And given that with, return ratios being on par with the private sector banks, I think there is another round of opportunity of re-rating going to happen with the PSU banks. It's only a matter of when and not whether it will happen.
Okay. Vineet, let's just look at the other part of market and also on cycles. It's often said, and it's mostly true, that a set of leaders that takes up a market during a certain point of time changes hands, and new people emerge, new stocks emerge, new sectors emerge to take the market higher. We've seen a very sharp rally in PSUs and a decent correction now. What, according to you, will be the newer sectors that will take this market up? Do you think the PSU story is over?
So the PSU story is far from over, but there can be a slight. The US, the PSU story is far from over, but we can have a sideways time correction taking place for some time. The government's intent to go loggerheads with faster growth in infrastructure provides PSUs with that space of growth, despite the fact that we have seen some very, very vertical moves that take place. So PSU moves are definitely going to go on, but 2 3 sectors where I would like to point your attention to, which the market is not yet started discounting, is one is the the data center space. In the US, the data centers, because of AI, are taking up substantial growth. Power consumptions are going up, and data centers are going to come into the limelight out here. The second is the chemical space, where we have seen the correction happen over time. Destocking has happened, and I believe that this is one sector, contrarian, which can give you very, very good entry points from a 1 to 2 year scenario. Obviously, at this point, we are not suggesting that the glory of yesteryears of the chemical stocks will come back, but you'll see very handsome, good double-digit top line and operating leverage take place, even in the large counters and the primary chemical plays that are there. So these are some of the two spaces which are kind of ignored by the market. which I think will see substantial investment take place. So, when we talk of data center, I think Techno Electric, Anand Raj, these companies look good. There is a small SME stock called E2E, which has, gone up nearly, has been a multi-bagger. And after we have spoken to them, we think that there's a long road ahead of them. So I think these are some of the stocks that can do well out here. In the chemical space, we like the big boys, Deepak Nitrite, Aarti Industries, uh, some Archean chemicals is another stock to look at. Pharma selectively, we are bullish. Markson's Pharma, we are very, very positive on. That stock is gaining market share in the US. And we think that that stock can also do well. So these are some of the themes that market is not yet discounting and which can do very well going ahead.
Okay, well, fair enough. Well, good point.
Okay,
And we will
just a
keep an eye
moment,
out on. Yes, please, Shail.
Yeah, Sakshi, I just needed a clarification. Vineet, we couldn't get the name of the SME company that you had mentioned, which is already a multi-bagger.
SME company E2E Networks Limited.
Okay, I'll look it up. E2E Networks, fine. Thank you so much, Vineet. What a pleasure to have you as always. And maybe next time around somewhere midweek next week when we have you here, the dark clouds on Indian markets may have been blown away, and we'll see a smiling Vineet who will tell up. Tell me.
No, I was saying touch wood. What you say?
Yes, touch wood. Of course. We look forward to meeting you again, Vineet, and thank you so much for your time. Have a nice weekend ahead, and let's just change gears. What Sakshi and I will do is we'll take a very quick break, and on the other side of this break is waiting Kunal Rambia with his two top picks. Stay with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Welcome back on Market Today. It's been a very, very painful day, but not if you are an ITC investor. Across the markets, we are seeing this froth getting eliminated. You have large signs of profit booking, of short sales into the market. I am purposely not giving you rates because they are visible on the screen, but it's pain, and this pain is likely to last a bit longer. But for the last 20-25 minutes of trade, we have Kunal Rambia with us now. Good afternoon to you, Kunal. What view on the Nifty? What are the downsides that you are tracking? Will 22,000 hold for today, and will it continue to hold for the next 2 or 3 days? Views on the Nifty and maybe 1 or 2 picks.
To all our viewers. So if I look at the Nifty, yes, I think 22,000 will hold very decisively. The only reason for me to say this is the 15th Feb, the market closed at around 21,910. And since then, we are seeing this bottom getting tested third time again. And what we are witnessing just now in last 15 minutes, you can see a decisive bounce on the Nifty, which bounced from 21,900 to 22,040. So I think again that support is getting reconfirmed on the indices. If I look at the mid-cap index, again, that's looking really good from present level point of view, which is at around, the futures is trading at around 10,450. I think from here, we can see a sizable bounce coming in. So if I talk about the stock specific ideas, the first pick from the large cap can be Lotus Lab. Again, that counter is available right near to the support with the minimum downside. I think one can initiate a buy on Lotus Lab, and the targets on this can be as high as 415 to 20 with the stop loss of 395. And the second is Asian Pin, which I like the most again from the risk reward point of view. At the present level, very minimum downside on the counter. So future is trading at around 2868. So with the stop loss of 2800, even in the cash, the stop loss being 2800, I think one can go long with the target of 3000 on this also.
Okay. So those are the two stock ideas from Kunal. Very good afternoon to you, Kunal. Of course, the pain continues to be seen, but we are seeing some kind of a move continuing on the banking space like Kotak, ICICI, HDFC has also come back into the green now. There's some recovery happening from the lower levels on Bajaj Finance, and some pharma names like Cipla is coming back in action. So some green ticks is what you can spot from the lower levels. Where exactly are you keeping your focus sectorally? Where do you see the dips being bought in this market?
Sakshi, if you remember the earlier discussion we discussed about the focus now getting shifted to private sector banks. And the
Yeah.
topics which I shared at that time was Kotak and HDFC Bank. And as of now, again, I'm really comfortable holding HDFC Bank in the portfolio. The reason being the risk reward ratio is very favorable. It made constant three bottoms at around 1410. It's trading at 1460. So by any chance this counter manages to cross 1470, that would turn out to be the breakout. One can initiate a fresh long above 1470 with the stop loss of 1440. Even from trading point of view, one can expect the target of around 1500 to 1510. And if someone is already holding on to it, I think the risk reward ratio was favorable when we discussed. It's still turning positive. And the second is, of course, Bajaj Finance, where I'm really very comfortable. So at the present level, the counter is at around 6461. So with the stop loss of 6400, one can think of initiating longs on this also, and the targets can be 6600. So I think these are a couple of those large caps where I think the depths are bought into.
Kya baat hai. Kunal, let's focus on the lone bright spot in the morning. That's ITC. The first tick that we saw was an uptick of 10%, and that went bang into the 200-day moving average of ITC, and that paid to at least further gains for the short term. Now, what are the charts of ITC telling you after this spectacular rise in a market that has fallen equally spectacularly?
Unfortunate counter, actually, when it starts moving, the market starts correcting. Actually, what we have seen is from May 2023 so far, ITC was constantly taking support at around 430. We saw the breakdown of this somewhere in the beginning of February, where it broke below this 420, 430 mark and came down to those 395, 400 kind of levels. Today, it has reclaimed that again support, which is at around 425 to 430. Though in morning session it was up, and now it's trading near to the low of the day. But I think this 425 mark is a very strong support from a whole year perspective. So if I think this counter manages to hold this 425, 430 in next 2 to 3 days, I think we can see a bounce till 445 to 450 very soon.
Okay, so we have this kind of positivity coming in on ITC. Amongst the index heavyweights, Kunal, any view that you would hold on Reliance as well as Infosys? HDFC, of course, you're positive, and that's helped the market over the last 2 days. But any view on Reliance and Infosys, the two other index heavyweights?
Being very honest, Reliance has actually shown a negative sign on the chart today. If you look at the steady rally which we saw on Reliance from around 1st of Feb till I think around 6th of March or 7th of March, this entire consolidation with positive bias is now coming to an end, and today's fall seems really very drastic. So I think Reliance may just drag the market little lower. The support to watch out on the charts will be 2820 to 2825. That's the zone to watch out on Reliance. I think that can be the good level to revisit and initiate longs if it consolidates. If you look at the Infosys, it's been in sideways consolidation since now 4 to 5 days, the resistance being 1625 and the support being 1600. So let's wait for that consolidation to be taken out on either side. If Infosys manages to cross 1625, then I think it might just reclaim the previous high of 1720 to 1730 soon. So yes, I'm very bullish on Infosys from the structural point of view. Not really keen to buy Reliance as of now on this decline.
Okay. Anything from the broader market IT space as well that takes your attention as with at this point in time? We did see a whole host of stocks continuing to see some more momentum amid this sell-off as well. Where do you see lucrative valuation and perhaps charts are looking positive in the mid-cap IT space?
So not really in mid-cap, Sakshi, but I have definitely shortlisted one counter, that's TCS. That's a large cap IT counter. Now, if you look at the entire consolidation of last 1 month, this counter gave a decisive breakout at around 4150. It retested that breakout today, and it's hovering at the same level. So I think with the minimum stop loss of 15 to 20 points from the present level, one can initiate long. So 4130 can be the stop loss on this, and one can expect the trend to continue in TCS as of now. Not really eyeing on any major those mid cap IT companies as of now.
Okay. Sakshi, what we'll do is we'll pay attention to the Nifty. We've been ignoring it since morning, especially me. For the moment, you see a triple digit loss on the index, which is at 22,030 points. Now, I could have left the story there and moved on, but there is a very, very interesting thing that has happened, to which Kunal has already alluded to. You see the low of 1st March. It was about 22,047, and the day before was 21,860. So what has been tested today is 21,920 or 21,910 thereabouts. It will be very interesting to see where the Nifty will close today. My understanding is that somehow bulls will ensure that 22,000 remains with them, and then tomorrow is another day. Of course, a bit of pain is also coming in because of the weekly expiry of the bank Nifty, but nevertheless, some moves from HDFC Bank, a bit of an uptick on TCS, and then let's see what happens between 310 to 330. My understanding is that we may be able to save 22,000 as far as bulls are concerned on the Lal Street. Kunal.
I 100% agree with you, Shail sir. That's what even we discussed. So third bottom, by any chance, if Nifty manages to break that 22,000 mark, which is a psychological mark, and also the previous 3 times, the tested support, then I think that might just create panic. But otherwise, this is the good level to keep watch on. And from here, I think one can initiate the longs also on the selected counters.
Okay. So 21,875, 21,920, these are the levels that we've seen over the last maybe 3 weeks, and these are being tested. Let's hope and pray that at least on the Nifty, we've seen the back of pain, and then from tomorrow onwards, we'll have some kind of support, some kind of sideways move, and then maybe the final up move that we are expecting. Kunal, money is moving into FMCG and Pharma. You've mentioned ITC towards the FMCG side. Anything that looks to you good on the Pharma charts?
Shail sir, the first counter which I would like to discuss is Sun Pharma. Now the counter is very much in trend. We have seen a very strong momentum picking up there. And if you look at today's behavior, after 4 days of decline, it has retested the previous bottom as of around 1550. Today's low is I think around 1544, so that's almost at the previous bottom of 1550. And see the spikes which are coming right now on the screen. From 1550, it has 1544, it has bounced to 1560, and the volumes are also picking up. I think this counter might just continue with its previous rally. The immediate breakout point on the chart will be 1565. So if the counter manages to go above 1565, one can initiate a buy and again ride the entire rally, which is ongoing since many months now.
Okay, so that's as far as the pharma space is concerned. Would you like to add any hospital names to this list? We've seen volatile action over the last 2 or 3 weeks, but is there anything that looks positive on the charts from this basket too?
Not really, Sakshi. If I just look at one Apollo hospital, we saw the correction, consolidation is going on, but there is no sign of recovery as of now. So we'll just wait, for a couple of days to see how these hospital space shapes up. I think there'll be more pain left based on the the broader structure of higher top, higher bottom, which is now getting converted into lower top, lower bottom. But yeah, pharma selectively we are certainly bullish.
Okay. We have been looking at the PSU rally, of course, unfold in front of us. But now many of the stocks are actually down almost up to, say, 30 to even 50% from their peaks as well when we talk about the PSU move, especially when we talk about the railway stocks. So, IRCON is down 31%, IRFC is down 34%, RVNL is down 35%. So, whole host of these railway related stocks, how would you really look at them, which are down 30-35% odd? Do you see this as an opportunity, or do you see now this is going to be a pain point for some more time?
Seems to be the pain point right now, Sakshi. Reason being, lower top, lower bottom formation will create that, that the catching the falling knife kind of situation, which I would not really be keen to. Certainly, we shortlisted all these counters to initiate longs, considering the sideways consolidation might turn positive. But today's decline, especially in say IRFC kind of counters, which is down by around say 8.5-9% in today's session itself, it's breaking even the previous bottom. So I'll turn cautious on these counters. I'm not saying that one should, just be in hurry to exit the position, but yes, one should definitely keep an eye on the further momentum. If the slide might just continue, then we might see the lower levels of around 100 to 105 also on IRFC. I'm just talking about one counter as of now. But yes, we'll revisit at that point in time to see if the entire structure is still positive. But such kind of corrections are also needed so that we can initiate the fresh longs with some kind of favorable risk reward ratio. Just one-sided rally was a little painful to initiate the fresh longs. I think this seems to be the opportunity, but not at present level. We'll just wait for a couple of more days to get the clarity.
Fair point, but are there any PSUs where you may be tempted to buy the dip, where you think that, you did not, somebody who's not got an early entry, these dips could perhaps be looked at from a long-term perspective to be added? Any particular those stocks from PSU basket there?
So I'm talking. So yes, I'm sharing one counter, which is the PSU banking stock actually, and that's Can Bank. Now, the trend line which I'm making here is by connecting the extreme low of October 2023, where the counter made low of around 350. From there, if I make an ascending trend line, the counter has just perfectly tested that trend line, which is at 530 levels. Today, counter made low of around 529, right now trading at 534. By any chance, if it consolidates at the present level and resumes its up rally, the breakout can be considered at 550 with the stop loss of 530. Then one can initiate a buy, and the targets can again be the previous high, which is 600 levels. So yes, Ken Bank is something which we shortlisted just half an hour back.
Okay, and Can Bank was at 600 rupees till about 2 weeks ago. Remember the stunning set of earnings that came in, and the stock that had announced a split in its holding value. So with that in mind, I think this is an opportunity to add this particular stock if you believe in the PSU banking setup, and of course please do take another independent view when it comes to this particular sector. Coming back to the theme of defense, Kunal, one of the charts that's been completely destroyed is BEML. The kind of selling pressure that you're seeing today is phenomenal, 13%. The shipbuilders in very, very strong pain. Cochin Shipyard 11% lower, 723. Garden Reach 11% lower, 681. And of course, Mazgaon Docks down about 8% in 1852. Anything that catches your fancy within the defense space, Kunal, which you might want to add?
So, Shail sir, if you look at the BEML, I'm just highlighting a couple of previous highs and the lows. On somewhere in September 2023, counter made high of around 2650 kind of levels. From there, we saw the breakout coming somewhere in the month of December. That high was taken out, counter went up decisive, and then again there was a decline somewhere in Feb. On 13th Feb, counter made the low of around 2680, which was again retesting of that previous breakout level itself, and today it's trading at around 2680 again. I'm not just saying that this is the point to reinitiate the buy or something, but by any chance, if this 2680 to 2670 zone is taken care of for next couple of days, and if it consolidates, then I think this role reversal, which is known as change in polarity, might just come into action, and then we might see the rally continuing. But looking at the pressure today, that seems to be a little difficult, but we'll just wait for a day or two. If it continues to slide further, we can think of initiating the shorts, but otherwise this can be good buying opportunity even from long term.
Okay. So that's as far as the views are concerned on that. Let's again come back to the market and see how is the current shape like. So we are below 22,000 mark as of now, 1.5% lower, and we are just about 12 minutes from the day's close. The only 6 stocks or 7 stocks that are holding up in trade are ITC, ICICI Bank, Kotak Bank, Cipla, Bajaj Finance, and Infosys, HDFC Bank. Rest of the stocks are all slipped into the red, especially all the sectors are down in the red as well. The top drags, let's look at over there. On the Nifty, it's Adani Ports, that's down 7.5%, Power Grid 7.5% down, Adani Enterprises down 7% plus, Coal India, NTPC. These are the stocks that are big laggards. ONGC has slipped into the trade as well. BPCL is also down and about, and of course the metal names, they are losing their sheen. So JSW Steel, Tata Steel and the likes are also slipping away. Power stocks, do you still have a positive view on the power stocks in this kind of a mayhem that we are looking at into the markets? Should one be really looking at adding any of the power stocks, because this theme has played out a one major theme throughout this last 6-8 months odd, and many experts do believe that this is a theme that could reign for the next 5 years or so.
Certainly, yes, Sakshi. Just specifically talking about Tata Power, which I tried very closely. If you look at the structure, the first breakout somewhere was in the month of December. The breakout was at around 280. Counter kept on making higher top, higher bottom consistently. If you look at the recent last 1.5 month performance, consistently Counter has made 360 as the 2 times bottoms, and today it's trading at around 370, which has still not reached the previous bottom. By any chance this counter manages to reverse from here and crosses 385 zone, I think that can be the perfect bargain buying opportunity. With 15 points as a stop loss or 20 points as a stop loss, one can participate in the ongoing rally. One needs to focus on the volume and the price action. So if this price action, which is declining since last 2 to 3 days, by any chance if it gets converted into higher top, higher bottom, I think that can be captured as the ongoing rally. So yes, I'm bullish on the structure so far, but yeah, if at all the sell-off continues for next 2 to 3 days, then we might have to revisit our views.
Fair point. It's now 3:20, Sakshi, and one good thing that will happen at 3:30 is that for today Indian stocks will not fall. That's a big relief. But till then, and now we still have 10 odd minutes, and I wish I had something positive to say. Normally, I generally close my eyes to the kind of pain that is there in the market, because I know it will go away. But today has been one of those really disastrous days if you are a long-term holder of equity. Some of the prices are completely unrecognizable, be that as it may, and these kind of things happen in our lifetimes many times in the market. With the good comes the pain. Let's look at the most active counters as far as NSE 500 is concerned, and it will give you a hint on how things are moving. So I will look at the positives. The first 3 top traded counters on the National Stock Exchange today are in the green, ladies and gentlemen. HDFC Bank is being used very well to manage both the fall on the Nifty and the move on the Bank Nifty. 4,400 crores worth of transactions have happened. ITC, we've been talking about regularly throughout the show, 4% higher, 4,275 crores worth of transactions, apart from the block deal of 16,000 crore rupees. ICICI Bank in the green, 1,084, 2,500 crores worth of transactions that have happened. Then comes the selling pressure. Nothing much happening on SBI and Reliance. Tata Motors is 4% down. I don't think so anybody in the market will take this cut negatively. Remember, the stock hit fairly recent highs, record highs in the last week. NHPC is a pain point, 9% lower. Tata Power was 6% lower at 371. Swan Energy, a much needed correction, 14% down, 469 is the price that you see. Then you have IRFC, Axis Bank, Yes Bank in terms of volume pressure. Sakshi, this is all that I'd like to say, and I'll also mark the all-time highs for today. Intellect Design, Colgate Palmolive, TCS, and Sakshi's favorite sport when she's not anchoring, shopping. Therefore, Phoenix Mills, 2608, 7% lower, but still a record high at 2971. Sakshi.
Oh, well, you know, when the markets are gloomy, all you want to do is to go for a retail therapy. I think, Shail, that's what exactly is playing out right now, because there is a liquidity flush that we are seeing in India. So if not markets, people are going to be spending that money, whatever they've made in the Indian markets thus far. So that's what's playing out, I believe. Let's look at some of the mid-cap names then and ask Kunal, if you can help us with some of the stocks that you'd like to purchase even in this 5% downtake. Would you look at it as a sale in the mid and the small cap space, or would you rather stay away?
See, again, Sakshi, the way we just discussed, a couple of minutes back, rather than catching the falling knife, I'll wait for the consolidation to come in. So, but yeah, in this kind of market, also there are many counters which are still looking very positive and encouraging, and they are available near to the previous bottoms. Just like say Tata Power, which we discussed, there are pharma names like say Strides Pharma, which is again available near to the previous bottom. So these are the counters where I'll remain comfortable and buy even at the present time of the market. But as we said, let's try to catch the ongoing rally. So there should be at least one positive sign on the chart where we go and encouragingly initiate the buy with the minimum low as the stop loss. So wait for a day or two, consolidate. Let's wait for the consolidation to initiate the fresh loss.
Okay, fair enough. But would you give us your 2 cents on what's the best way to approach this market, say tomorrow when we open? Today was definitely a painful day, but if the pain continues, what is the strategy that you'd advise on Nifty, Nifty Bank, and of course the broader markets at large? Where is the hiding place available for the investors?
So large caps certainly are doing good. So my focus will mainly be on large caps from 15 to 20 days point of view, rather than diving deep into the mid caps and small caps. I'll focus on large cap. That's number one. Number two is, if I look at the Nifty specific levels, then 22,000 to 22,025. This is a zone which I'm waiting for markets to reclaim. Once it reclaims that level, I think I'll be comfortable buying this entire decline on the Nifty with the minimum stop loss of around say 50 to 70 points. The longs can be created for 400 to 500 points rally again. But by any chance, if the index continues to slip from the present level, then I'll stay away from the market. So for next day, that's tomorrow, I'll wait patiently for first 15 to 20 minutes. I'll wait for the high and the low to get created. And then if the high is taken out with day's low as a stop loss, I'll be the first buyer in the market. That's what is the plan as of now. But yeah, if the slide continues, then we'll refrain buying from the present level.
Okay, ladies and gentlemen, just 4 minutes left as far as today's markets are concerned. And I want to put this day behind me. I'm very, very certain. Let's look at the top gainers and losers within the Nifty, ladies and gentlemen, and let's look at what the market holds for tomorrow. Okay, just give me a moment, please. As far as the Nifty is concerned, we look at the losers first. Power Grid, ladies and gentlemen, 7.6% lower, 264. one shouldn't be worried about this one. It was at a recent record high of about 289, 290 just a couple of days ago. Adani Enterprises 2904, 7.4% lower. Adani Ports, these are very, very high beta stocks liked by traders on both sides, and they are amongst the losers today. Coal India, NTPC, again, they were at record highs, and they've given back some of their gains. Tata Steel also at a record high fairly soon, now 6% lower, 143. ONGC, UPL, Tata Motors and Hindalco down between 4 and 6%. Own gainers, ladies and gentlemen, put your hands together for ITC, 4% higher, 422.80. ICICI Bank, something which the market is appreciating, 0.4% higher. Cipla, Pharma giant, 1473 for you, and Bajaj Finance flat today, but it's a meaningful green color at a time when across the board you see pain happening. As far as the overall FNO space is concerned, National Aluminium, Idea and Steel Authority of India along with Hindustan Copper are the top 4 losers, anywhere between 9 and 11% for you. Sakshi.
Right, and in between this, there is some, good news coming in from the cabinet for the Delhiites. The cabinet has approved extension of the Delhi metro line, and 8,400 crores will be spent on the extension of 20.7 kilometers of the Delhi metro line. So that's, and 2 metro rail corridors are likely to be completed, over the next 4 years odd, is what the cabinet has said as far as the metro expansion is concerned. So that's the bright spot coming in. See, there's always some good news that comes about in the markets.
Absolutely, absolutely.
Yes, so I'm sure Delhiites would be celebrating.
I'm wondering where.
Yes, sir.
Yes, actually, I'm just wondering where these extensions will be because, Kunal is from Bombay and they've been talking about this metro for decades now. Nothing has happened there. And here we are building 2 additional lines. I'm sure he's jealous of us. Right, Kunal?
So I'll think of shifting to Delhi very soon.
You're welcome. You're more than welcome.
Chola Bhatura for you.
Okay, and I think Kunal, you were mentioning Zydus Life. There's a positive news again for this one in the dying minutes of trade. It's launched the generic medicine of cancer drug olaparib in India now. So that is perhaps going to be another positive for Zydus Life that has been ticking higher for the last few sessions as well. So we will watch out for this stock tomorrow because it's just come in the last few seconds of trade today. But as we speak about the markets, they're shutting shop 1.5% lower, definitely off the lowest point or the lowest tick of the day. Some recovery from those levels, but still there is a lot of pain. 928 points of a loss on the Sensex as well, 350 points gone for the Nifty today. Of course, the small caps and the mid caps is where the pain was more. 4.6% of a loss for the mid cap 100 index, and the small caps have lost somewhere to the tune of 5.3% in trade. When we talk about the Nifty laggards, Adani Ports, NTPC, Tata Steel, and of course a whole host of power stocks like Power Grid have lost ground. ONGC, UPL, Tata Motors, the other laggards at this point in time. As far as the gainers are concerned, ITC, ICICI Bank, Kotak Bank, Bajaj Finance, Cipla, HDFC Bank, Infosys, the only stocks that have managed to pull themselves into the green in an otherwise weak set of the markets. On the FNO space again, apart from ITC, you had Abbott, Cipla, Nestle, Persistent Systems as the movers on the top side on the FNO action. On the downside, you had India Cements, BHEL, you had RBL Bank, Hindustan Copper, NMDC, a whole host of these metal names, Shail as well, slipping into the red from the FNO action today. When we talk about the kind of move that we've been seeing sectorally, of course, apart from the broader markets, pain was escalating on realty space, metal space, 5.9% lower for the metal index, realty space down 5.4%. You had the oil and gas that was seen dipping 4.6%, autos down by 3% in trade today. But with the hope that perhaps tomorrow will be a brighter day, we will now end this session. Many thanks, Kanal, for being with us on this show and helping us navigate through the market moves. And thank you so much,
Absolutely, my
Shail,
pleasure.
for being with us on this edition as well. With that, we wrap up, but do stay tuned on Business Today TV as lot more continues to be on your screens from markets and beyond, from business world as well. So stay tuned and don't forget to like and subscribe to this channel.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.